Hi, and welcome to Mortgage Solutions. I'm your host, Mark Rigney. Now, we are all very aware of the housing crash that occurred and the decline in our property values. That being said, we will investigate the effects of that crash and how it pertains to your real estate tax assessment. On today's show, we have the Director of the Real Estate Division of Fairfax County's Tax Administration Department, Janet Goldsmith. Janet is going to educate us as to how they arrive at those values and what your options are if you do not agree with your tax assessment. Hi, Janet. Welcome to the show.
Hi.
Janet, why don't we start by describing some of the basics of real estate tax assessment and the functions that your office performs?
Well, we assess properties every year for tax purposes. And the real purpose of the tax is to distribute the tax burden fairly across all property owners in the county of Fairfax according to the value of their property.
Okay. Okay. How would a resident verify that their tax assessment reflects the market value of their home?
Well, the real estate assessments are effective each January 1, and they're based on sales from the previous year.
Okay.
So what we encourage property owners to do is to go online once they get their notice and look at the description of their house and then the sales that were that happened during the year in their neighborhood to find out what sales we used for their assessment. When you go online, you can also see all the sales in the neighborhood, the ones that were used and the ones that we didn't think really represented market value.
Okay.
For example, some of the reasons a sale wouldn't represent market value is if I were to sell it, say, to my son or daughter. Might not give a full market price for that transaction.
Okay.
Another reason is foreclosures.
Okay.
When a bank takes back a property, that property sale is not really a market transaction.
No, it's not.
They're repossessing it to get back the value of the mortgage. Now the bank would have to resell it. We look at all those resales to determine whether they're in line with the rest of what the market's doing or not. We also look at short sales. Again, we keep an open mind. Some are included, some are not included, depending on the sales transactions in the rest of the neighborhood. In general, what we're trying to do is hit market value, and that's really defined as what a willing buyer would pay a willing seller for the property, both knowing all that the property can be used for, and neither one under duress.
I see.
We like to be in the low 90th percentile of, if you compare the assessment to the sale, somewhere 90 to 95% of the sales prices on average.
Okay. Now we are in a depressed market now. How has the decline in real estate values affected the tax assessments?
Well, again, we're lagging the market, but in the past 2 years, last year we went down 5.5% overall on assessments, and the year before we went down 12.5%.
Okay.
So we have been bringing the assessed values down on average for, to reflect the market. Those numbers are really countywide averages.
Okay.
Real estate is so much location, 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 that what's going on in your neighborhood or your market area is really a better indicator of what may have gone on. Some houses went down more than those averages. Some properties held their values better and went down less.
Do you have any indication as to what you can do with the next time? Will it be depressed again, or do you know?
It's hard to tell at this point. Certainly the volume increased with the homeowners, the tax incentive.
Okay.
So we're analyzing those sales right now. We do know that foreclosure activity in the county has been on the decline in general for 2010, and that's a good sign as far as property values. But we do look at sales data all the way through the end of the year, so we're still analyzing what's happened.
If a resident doesn't agree with their tax assessment, what are their options, and how do they go about disputing that if they don't agree with what they're seeing?
Well, if a homeowner wants to dispute the assessment, we would like them to call us and discuss the assessment. We have appraisers standing by that when the notices go out to discuss assessments with you. We also have a lot of information, as I said before, on the website where you can check the description of your home and the sales that we used. You can also look at the assessments of neighboring properties. So if you are in a Model A and your neighbor's in a Model A, the assessment should be pretty much the same, accounting for some differences in finish in the basement, attributes like fireplace, bathrooms, rec rooms, those types of things.
What if there were no sales in the neighborhood? How do you guys go about determining the tax assessment in that case?
What we do in that case is we will look at similar properties, sister neighborhoods, where we will, someone in terms of buying a property might compare two neighborhoods very similarly. Same price range. Historically, they've sold at the same levels. We would look to those sister neighborhoods to see what price levels we're doing there. In a declining market, if you had no sales in your neighborhood, we would again be looking at those other neighborhoods that might have brought your property down. In a rising market, we might be doing the same thing.
So it doesn't necessarily have to be a comparable, is that correct?
It would be comparable. We're going to look, when we go to a sister neighborhood, we're going to be looking for the same age house, the same size,
number of bedrooms,
same number of bedrooms, same style, so that it's really going to be, if someone were out there looking to purchase a house, what would they be, what areas would they be looking at? We're going to go to those same areas to try to determine the value. I mean, it would be nice if we had sales in every neighborhood every year, but the market isn't as nice to us.
I guess with the decline in our property values, is your office becoming inundated with appeals right now, more so than ever, more as opposed to like when the values were rising just a few years ago? Are you getting lots of appeals now?
We've got a fair number of appeals in 08 and 09. 2010 was fairly calm.
Really?
And we did have some people, believe it or not, calling, appealing, and saying we were too low. We think those were the folks that were getting ready to sell their property and wanted to make sure that we had accurate information. One of the things I should bring out is that we base our assessments on the information we have on all the properties. We follow up on building permits that are taken out and finished during the year. But we also have a program where we canvass 1/6 of the properties in the county each year. Our appraisers would be going door to door in neighborhoods trying to make sure our information is accurate. And as a matter of fact, there's a clip I brought.
Oh, yes, you mentioned, let's take a look at that clip if we get a chance. Just show that to our viewers now.
Just how are real estate assessments determined? How does the county decide the fair market value of your property? Determining the fair market value of the properties often requires that appraisers in the Department of Tax Administration make field visits to neighborhoods throughout the county. It's impossible for appraisers to inspect all properties in the county every year. Therefore, it's in the best interest of the homeowner to share any changes that occurred during the year to ensure that properties are assessed at fair market value. The Department of Tax Administration's goal is to review data within each neighborhood every 6 years, using a combination of field visits and aerial and oblique photography. DTA relies heavily on computers to help organize and store data that will help the appraisers do their job.
For example, this property in the Virginia Hills neighborhood has been combined into an assessment neighborhood where all properties are similar, and we would expect that sales would represent the vast majority of properties in the neighborhood. The appraiser who is assigned to work this neighborhood gathers all sales in the neighborhood and verifies that they truly represent market value. To do so, they would contact the buyer, the seller, the real estate agent, perform a field inspection, or we have in-house tools such as photographs from the last physical inspection, the deeds from the courthouse, the realtor's multiple listing, or aerial photographs available to assist in this task.
DTA appraisers use the market and cost approaches to determine the fair market value of your home. For most residential properties, the value is best determined from comparable sales data, known as the market approach to value. The market comparison approach may also be used with the cost approach, which looks at the depreciated replacement cost for the building plus the land value. In developing this approach, however, the total assessment is always compared to the total sales prices for recent market value sales of improved residential property in the neighborhood. The cost approach is then adjusted if needed to best reflect the total property sales prices.
Janet, we mentioned your office being inundated with appeals. What are the percentages of those appeals being approved now?
Well, if the appeal is well prepared and has a basis, there's a pretty good chance of it being a successful appeal. There are really a couple of bases for appeal. One is that we have your property incorrectly described. We may have more features or less features than the home has. And the other is that your home is not appraised similarly to comparable properties. And if you can show us one of those two things, then we will make an adjustment in the assessment. And about a third to a half of the appeals filed get some sort of adjustment.
Is that right?
Yeah. Some of our things that you wouldn't get adjusted for is just based on the percentage of increase or decrease. That alone isn't a basis. You really need to be looking at the sales and what the property would sell for.
If a resident had their own appraisal done, would your office recognize that, or did they have to use one of your appraisers?
Well, we would certainly consider any appraisal that's submitted with the appeal. We like to see that, and that might help us pinpoint where the disagreement is in terms of the value. But it's not required to file an appeal. You don't need to go out and hire an appraiser. Our county staff appraisers are well trained, and they'll be able to go in and review the characteristics of the home, talk with the homeowner, and choose comparables that come up with a fair and equitable assessment.
Does your appraiser actually enter the property and take measurements like other appraisers do, or do they do like a desk appraisal, if you will?
If there's something they need to see on the property, they'll go out and remeasure the house, make sure that there may be a condition the homeowner wants us to see, a leaky basement, foundation cracks, something like that, then they would go in. But often we don't need to go into the home, and that's sorted out in the initial discussion.